A lot of letters, Sarat. Welcome. Good to have you with us. You think tech is now stretched, overvalued? If so, by how much?
You know, Tyler, when you look at NVIDIA, and these are stocks we own. So we own, we own Google, we own NVIDIA, we own Microsoft. We actually trimmed NVIDIA a couple of weeks ago. It's up 83%. The valuations of some of these companies are remnant to kind of where we went back during the pandemic phase, because investors are saying, we're going to see a slowdown. Let's go back to this playbook. You know, we had some hiccups in the financial sector. So what's safe? And yeah, these are safer companies, but when you're trading at a Microsoft in the high 20s, same as Apple, it's going to be hard. You're going to crowd out other investments. And I think that's where you have to be very careful. We do own them, but not in the size of the S&P. And I think if you've made some profits, there are other areas in the market that haven't performed. I mean, 5 stocks in the S&P. I feel like this is, you know, deja vu all over again, that are riding the S&P when you've got 490 stocks or so that are flat to down for the year.
So I guess when you say the valuations are stretched, you cite NVIDIA, which has come back dramatically, 83%, you say. Boy, they must have been super stretched 3 years ago. I mean, compared with where they were.
Well, yes and no. I mean, they've also, you know, they've had earnings growth in the last couple of years. It's just the multiples that came back down, and now they're going back up again because investors are looking at that and saying, hey, you know what? If we're going to have a slowdown, these are going to be very defensible companies. I don't disagree with that. The fear that we have is if we are in a slowdown coming in, you're going to see advertising pull back. You're going to see corporations pull back, the consumer pull back. These companies are not fortresses that are not going to, you know, again, I'll go back to the pandemic world. We're not going to be ordering more online. We're not going to be sitting at home doing some of these things. You're going to see a pullback across a lot of sectors, and then valuation will really matter. Even if interest rates come down, you're really going to be looking at earnings growth, and that's where, when you've got all this competition in the cloud, you've got, you know, huge amounts of competition in advertising. That's the issue. And these companies have hired a lot of people. You were talking about how many they have. They're still not back to where they were pre-pandemic. So expenses will do it, but earnings are going to be really important, and you need operating leverage. And especially if you see things like advertising come back down, it's hard to sustain 25, 30 PEs.